My name is Victor Murinde. I'm the Executive Director of the African Economic Research Consortium, AERC, which is Pan-African, headquartered in Nairobi since 1988. Regarding the policies for structural change that would sustain economic growth on the African continent in general and in Kenya in specific, would revolve around industrial policy. Industrial policy revolves around the way countries can transition into manufacturing and processing that would then generate industrial outputs or manufactured goods for both domestic consumption and for exports. Collaboration among the various stakeholders, like this evening we're having CFA East Africa collaborating with the Trade Development Bank Group to bring around various stakeholders for conversations. Myself from the African Economic Research Consortium, the Governor Central Bank of Kenya and his team from the Central Bank of this country. We have also had different professions, especially in investments, in financial analysis, in accounting, in financial management. It is a very important medium where we can get together and hold conversations about a number of things, including the growth rates in Kenya, benchmarked against the growth rates in Africa, benchmarked also against the global economic growth rates. We have predicted that the growth in Africa is stable and going up, recovering from the COVID period, and actually much better than the global rate, including OECD countries. That's very positive news, that inflation is stabilizing, exchange rates are stable, and central banks in Africa, and in Kenya in particular, are building up foreign exchange reserves to be able to manage a high degree of import cover and to be able to service the debt requirements.